Hi, everyone, and welcome to the presentation of the 2022 Financial Marketers Index. I'm Binna Kim. I'm the CEO and co-founder of Vested, as well as a founding member of the Financial Narrative. We're so excited to be sharing the results of this research with you today. It's the third year Financial Narrative has collaborated with Opinium, a strategic insight agency, with the goal of giving financial marcoms leaders visibility into a rapidly evolving landscape. Now, before we turn it over to our partners at Opinium to kick us off, I'm happy to introduce our featured panelists who will be sharing commentary, their insights into their research findings, and what they're seeing in the industry. Today, we have Alyssa Gilmore, Global Head of Communications, Financial Products at Bloomberg LP, David Blackburn, Head of Digital Marketing at ProShares, Elliott Bundy, Chief Communications and Marketing Officer at Acrisure, and Michael Marinello, Head of Communications and Content at Aon. Thank you all so much for joining us today. Now, I'd like to welcome to the stage our partners from Opinium, Alexa Nightingale, Research Director, Giulia Prati, Vice President of Research. Thank you so much for being here today.
Thank you, Binna. It's great to be here with you, and we're so excited to be conducting this research for the third year in a row with Financial Narrative. This is a global study of financial services, marketing, and communications leaders. Thank you to everyone who has joined today who participated in the survey. So the goal really is to understand the key challenges, most effective strategies, and the biggest predictions for 2022 in financial marcoms. So we spoke to 65 marketing leaders and 30 communications leaders on the whole, adding up to 102 financial marcoms leaders across the globe. They split out across sectors. So we spoke to 31 in fintech and insurtech, 28 in investment and wealth, 22 in banking, and you see the others here on the right. So really representing marketing and communications professionals across different business sizes and geographies. So we have 4 key insights for you this year. The first being an emphasis that we're seeing on growth and focusing on communicating stability across our marcoms leaders this year, as focusing on ESG starts to take a bit of a back seat after really spiking during the COVID years. And we're also seeing a lack of resources becoming a key barrier to strategic thinking for our marcoms leaders. Budgets and teams have really enjoyed growth, but we are seeing signs of a slowdown as we head into 2023, and impending recession is also starting to affect executional plans. So we're excited to share all of these in more depth. So our first key theme is this emphasis on growth and stability as ESG has been taking a back seat relative to last year. So as businesses are bracing themselves for this potential recession and COVID-19 is firmly in the rearview mirror, 2022 really saw companies concentrating on growth. We see 40% of marcoms leaders indicating that they are expanding and marketing their offering has really become a key area of focus. And this is an increase year over year of about 14 percentage points versus 2021, 16 percentage points from 2020. We're also seeing a quarter of leaders identifying retention of existing customers and aligning marketing and sales as key focus areas for 2022 as they look to future-proof their business ahead of this economic instability that we may be headed into. And you see at the bottom there that pivoting strategies due to COVID-19 really taking a back seat. And we also asked our respondents what their short-term priorities were over the next 6 months. So how important did they think each of these would be for their company to communicate and market itself in each of the following areas? So we do see that as in prior years, companies are finding it paramount to market themselves in the short term as trustworthy and stable in these uncertain times. And that's at 97%, up an additional 8 percentage points from last year as potential recession looms. Alongside trust, we see that communicating the company's key value proposition and brand authenticity also remain key short-term priorities and are also up from last year, as is communicating data privacy. Interestingly, though, as we look to the bottom of this chart, what we're seeing is that while in last year's survey, in the aftermath of COVID and everything that was happening in the world, we saw an increased focus on brand purpose. In contrast, this year, we see purpose further down the short-term priority list as businesses are responding to that economic downturn. So messaging related to diversity and inclusion, that has been deprioritized a bit, down 14 percentage points versus last year, as well as communicating ESG, also down 13 percentage points versus last year as short-term priorities. So really interesting to see that. But what's particularly interesting is that it seems that while those are being deprioritized in the short term, they remain more important in as long-term priorities. So in terms of areas of focus that Marcom's leaders predict for the next 2 to 3 years. So you see that here, that comparison here on the right.
So I want to pose a question to the panel. We're seeing communications around ESG and diversity and inclusion drop as a short-term priority for FS Marcom's leaders, while both remain more important longer-term priority. If you're pulling back on comms around these areas, how will you still prove your credentials there? How do you see this playing out?
Well, I think we're a bit of an anomaly because we're taking an opposite tack at Aon, and we're actually doubling down because we both have a very successful ESG consulting practice. So we have clients on the ESG side, and so we try to live what we preach. And so it would be sort of a bit. You can't go to market telling and working with clients and asking them and telling them what's important in the ESG space and not be doing it yourself. So we're actually taking this as an opportunity. And as a result, I think that'll help us in our consulting with clients around what are the things that are important, what are the things to lean into, and that, we continue to stress the idea that ESG isn't a nice to have. It's something that's critical to your business.
Thank you. Elliott, what do you think?
Ben, I'm happy to jump in there. I think it's I would call it maybe more of a realignment from my point of view toward the natural state of things where we have to balance many priorities as companies and communicate on behalf of companies to our various stakeholders, right? I think there's sort of natural points where collectively business society or society at large, we decide, we're going to focus on something that's new and important. And as a result, it gets a ton of time and resources. And I think the danger in that is that it fades entirely off the agenda. And there's certainly been examples of that over time. Pick your cause. So I think in this case, it's probably more a rebalancing and a reflection of just trying to keep it, if not front burner, then certainly I don't know what the equivalent is, mid burner. I don't know. My wife does most of the cooking at home, as you can tell. So it's yeah, so I think it's important to just keep that in mind that if it's a priority for your company, it doesn't mean that it stops being a priority. It just means you have to balance it in addition to everything else you have to juggle.
It's really interesting, actually, because I'd say we're seeing something similar. It's not to say that ESG is not a priority, because I do always think it is a priority. It's more that this focus on revenue generating Marcom's activities has really gone up the priority list. So we're seeing a lot of interest in sales enablement, lead gen activities, anything that puts that supercharge behind driving revenue. Also, with that comes greater accountability. So definitely a heightened focus on reporting, data, analytics, anything that draws that connection between what we're doing on the marketing communication side and the impact on top and bottom line. So thank you for sharing. So along those lines, for firms who are pulling back in these areas in the short term, how should they balance the need to focus on sales, product marketing versus these longer term priorities? Alyssa, what do you think?
Sure. For us, ESG is a near-term and a long-term growth strategy as a leading provider of ESG data and sustainable finance solutions. ESG and inclusion are also core to our corporate culture and our vision for the industry. So we're not pulling back at all. If anything, we're doubling down.
Thanks. David, what do you think?
Yeah, great. Thanks for the question. I would agree with others that there's not a pullback on ESG. It's still a priority. It's still very important. That said, we are certainly dealing with macro and micro issues going on right now that need to be addressed, and establishing ourselves as a provider of strength and stability during this time is extremely important. And so we're trying to recognize the short-term and macro scale pain and discomfort that's happening, the volatility that's happening, and address that appropriately while staying on track with our longer-term strategic plans.
So the data reveals an increased focus on communicating trust and stability in uncertain times over the next 6 months. How are you planning on communicating trustworthiness and stability?
Well, you can't communicate trustworthiness. It's like telling people you're cool. I mean, anyone who has to go around telling people they're cool usually isn't. And I think you have to go around telling people you're trustworthy, I think puts yourselves in a deficit. So I think you actually have to model behavior before you can communicate, trustworthiness. And I think your actions will speak louder than your words. And I know that's cliche, but in these times, when social media and, all our audiences are activist audiences, if you're not genuine and legitimate, then you're setting yourself up for trouble. So people can see through, whether it's your own colleagues, your clients, or just the general public. So, our actions will speak for our trustworthiness more than us asking people to trust us, if that makes sense.
Thank you. Super helpful. Before we move on to our next theme, does anyone have any additional thoughts they'd like to share?
Yeah, so from just an Acrisure point of view, we're a company that's kind of always in this perpetual growth mode. We've been fortunate to be in that position for the last several years and plan to continue to be on sort of a growth and expansion mode. So, to us, trust really comes down to more awareness around what we're doing and knowledge around who we are as we're in a growth phase and building a brand. So I think the word trust can mean a lot of different things to different people. Again, it's sort of like the ESG conversation. It goes back to knowing kind of what your North Star is and what your rationale for existing and differentiating yourself as a company is. So if you're communicating awareness around your offering or stability around your product set, or just sort of more awareness around who you are, that could be trust in the fact of the customers we try to reach.
Thank you all for sharing. Alexa and Giulia, back over to you.
Thanks very much, Binna. That was some really interesting points raised. So moving on to the second theme that came out of the research. So we saw that lack of resources is really becoming an industry-wide issue, and that in turn becoming a key barrier to strategic thinking. So in 2020 and 2021, when we did this survey, it was the height of the pandemic or just in the aftermath of the pandemic. We saw that proving ROI was really top of mind for business leaders. But since then, things have shifted. We've seen businesses really focus on growth. And that means that they're actually struggling to find the resources to meet those ambitions. So we saw that about a third of businesses leaders said that they have a smaller team than they need. They also have a lower budget than they need. And that in turn means they don't have enough time to think strategically. So 42% of business leaders saying that that's one of the top 3 barriers to their success. And I guess following on from that point, with resources being stretched, leaders are also struggling with too many responsibilities for their team. And that is the main challenges that business leaders are facing right now. What we also saw, which we thought was interesting, is that leaders are having difficulties in managing shifting priorities from leadership and also struggling to find employees to fill open roles. And we saw that that was a particularly pertinent issue amongst leaders in larger companies. And I guess really that kind of indicates and reflects the current climate at the moment, with the looming economic recession. Potentially businesses are confused about actually how they should be reacting to the current climate. And to the point that we spoke about earlier around this idea that business leaders are struggling to have the time to think strategically, we're also seeing a worrying trend of decreasing strategic partnerships between Marcoms and C-suite. And we're seeing that continue in 2022 as well. So we saw 44% of business leaders are attending C-suite meetings often within their company, and that's down from 51% in 2020. So quite a stark decline over those 2 years, and a really concerning trend and an indication perhaps that organizations are viewing marketing and communications more as tactical rather than strategic. So I guess to talk about those concerns in a little bit more detail, I'm just going to hand over to Binna and our wonderful panelists.
So with each year of the survey, we see Marcoms leaders struggling less with proving the ROI of their teamwork. So I'd like to see what our panelists think. Why do you think this is? Was this because Marcoms teams proved their worth during COVID times, so they were better understood? Or is it just that other issues have become even more prominent?
Yeah, well, I mean, I would say that it's probably cyclical. I would say that, communications, marketing resources, and time and attention to the stuff we deal with is, largely top of mind when it comes to expense management and things, right? Because it's unfortunately often the easiest areas to cut. So if you're in kind of a trough of that cycle, then that's what you experience. But if you're at the top of that cycle, I think it's hopefully because you've done your job improving kind of your worth and ROI around your role. Plenty of opportunity to do that in the last couple of years. I think we all collectively as organizations realized the importance of staying connected when we were forced to be apart. And hopefully there's a bit of a lagging indicator around, still value being generated from that experience that comms and marketing organizations are still getting the benefit of.
Interesting point. David, what would you add?
Yeah, so really, it continues to be an interesting question. Obviously, my focus in my work is digital, and digital permeates everything. And a lot of acceleration of digital transformation has happened through COVID and because of COVID. So, excuse me, in the specific digital space, the resources are there, the commitment is there, and we continue to expect that. And as I say, digital isn't everything. So it's not just digital marketing, it's marketing, comms, sales, more client relationship more broadly. The support continues to be there as we see the digital transformation accelerate.
These are all really great points. Thank you for sharing. Do you think the fact that Marcoms leaders don't have enough time to think strategically is impacting their relationship with their C-suite?
Well, I think so. I think it's a sort of like a vicious cycle that if you're not at the table, then you're doing, not planning or strategizing. And as a result, if you're just doing, you're not really adding the type of value you should. So I think it's a vicious cycle. I think if you're not in the conversation and you're just acting and you're a go-do shop versus a strategic partner, then absolutely. We can't function at Aon without being at the table, and we are. And sometimes we're not, and it's just breaking old habits. But that's critical to our success as a Marcoms function as Aon, is that we're at the table, with leadership making the decisions, and that might not happen again 100% all the time with everyone, but you have to be at the table, or you're just, like I said, you're just an output shop, and an output shop doesn't have any impact and isn't allowed then to share back what the impact they could or couldn't be having as a result, if that makes sense.
That's a great point. Thank you. Anyone else?
It occurs to me that this finding could also depend on where Marcom's contribution is seen as most valuable to the C-suite. For example, if a business is making a hard shift to execution right now, a Marcom's leader who gets important stuff done with autonomy and is effective at reporting might be seen as more valuable than someone who needs to sit in a meeting.
So I want to talk about this stretch on team resources. What do you think is causing that? Do you think it's because responsibilities have increased because of COVID? Is it because you can't find employees to fill roles because people are staying at their current companies? Or is this because of employment freezes within your companies? I'd love to know what all of you are seeing out there.
Well, the data, I think, clearly shows that the pandemic period did present opportunities for communications teams to build demand and to grow. However, the demand just continues to outpace growth, even as we have had some pretty nice growth.
Thank you, Alyssa. Anyone else? I
actually think it's this whole, whatever you want to call it, smart working environment, work from home, hybrid, however environment. I think because I think people are working, quite honestly, and I know this is going to sound counterintuitive, and I hope my boss isn't listening, but I think people are working too much as a result of this new environment. And so I think that resources are stretched, people are stretched because they're actually doing probably twice as much work than they were previously, simply because they had no place to go. Like I commute into the office or to Vested maybe twice a week, right? So that's 3 hours of the day now that I lose from my productivity. But is that actually a good thing or a bad thing? And I think that's what it is. So I think there's just the way we're working right now. People are doing much more than they were before, simply because the pain point of, getting on a call and then being asked to do something is minimal to what it used to be. If you're in London and you have something that needs to get done in Rio, you call the person in Rio and get it done. Like back in the day, you'd have to set up a meeting and fly to Rio and see if you can get them to work. Now it's just you get on the phone or you get on the WebEx and you ask them to get it done. So I think people are working a lot more as a result. And then I think from a resourcing standpoint, I think it goes back to the other. If you're not strategic and you're not at the table and you can't prove your value, then you're not going to get money to do what you need to do. And I mean, I think it's simple. Either prove your value and get the resources, or you don't, and that puts you at a disadvantage. No, I think probably some economic situations right now and economic times probably aren't helping. And so I think that makes it even more of an imperative to show your value, because, research will show in other areas that sometimes the first thing to get cut are marketing and comms budgets, just because they think it's a nice to have, and you have to be at the table fighting for that. It's a must have, if that makes sense.
Thank you all for sharing. Let's turn it back over to Opinium to dive into the next topic.
Thanks, Binna. Some great comments there and some great insight from our panelists. Moving on to the third theme that we emerged from the findings, talking about how it's actually quite a positive picture that we saw in 2022. Budgets and teams have both increased, but there are signs of a slowdown as the economic recession bites. So firstly, looking at marketing budgets and marketing teams, how has the size of those changed relative to last year? So we've seen that nearly half of leaders have enjoyed an increase in marketing budgets, up to 48% from 41% in 2021, which is really positive. We've also seen that teams have enjoyed a similar rate of growth, but they've also managed to avoid decreases in 2022. So overall, a positive picture. Looking at communications budgets as well, in previous years, we saw that actually comms have suffered more in terms of their budgets and teams during the pandemic. And it's really great to see that they are having a comeback. So in 2022, particularly communications teams have seen major growth. We saw 60% of leaders saying that their teams have increased since last year, compared to 35% in 2021. So again, a really positive picture. However, if we look ahead to 2023, and I guess with the economic climate in the backdrop, there are signs of a possible slowdown. So again, firstly, looking at marketing, we're seeing that there is signs that potentially that growth isn't going to be increasing at the same rate as in 2022. So 34% of leaders saying that they're expecting their budgets to increase in 2023 compared to 48% in 2022. And marketing teams, we're seeing similar levels for 2022, so a bit more of a positive picture. But likewise, we may see that slowing down as the recession bites. Looking at communications teams, we're seeing that picture even more pronounced. So particularly budgets are likely to suffer from a decrease next year. 20% of leaders saying that they expect their budgets to increase compared to 70% that are expecting it to increase. Communications teams, again, a little bit more positive than budgets, but again, a sign that this is likely to slow down in 2023. So again, I'm going to be handing over to our panelists to talk about those points in a little bit more detail.
Panelists, any hypotheses about why comms is having such a big comeback in 2022?
Sure. I suspect most of this increase has been in the employee communications arena. As companies settled into their new normal, whatever that is, and hiring has resumed in force, the demands for culture conservation and morale lifting has only increased.
Thank you, Alyssa. Anyone else?
I think it just goes to the nature of, I think, the environment we're in right now, and the difference between, and we talk about in a resource constricted world, comms is a lot less expensive, right? I mean, when you think about it, earned media and owned media and social media, once you create whatever that piece of content is, you don't have to pay to have it extended or to have it amplified, because social media, organic media, all does it for you. When you think about it, when you create a marketing piece of content, not only do you have to pay to have that piece of content, but then you have to pay for all the distribution channels in which it's going. So if you're talking about, dollar to dollar, and impact to impact, I think comms can be much more efficient and a much more efficient spend. And so, that's perhaps where leaders are thinking, if I'm going to spend, X amount on, what's the impact I'm going to, a bad example, but what's the impact I'm going to get on a high glossy brochure versus a strategic placement in a trade publication that's an audience I'm trying to sell to, and which costs less, right? So I think it's weighing, the cost of that. And there's a quote that would be worth looking up. But it was Bill Gates said, if I had my last dollar to spend, I'd spend it on PR. So I think people, I think it's just a matter of, what the value is and what the organization needs at that time.
Thank you. Elliott, what do you think?
Okay. Well, I'll give you one theory of the case, which is that the relative ability of technology to impact the disciplines of comms and marketing is not even throughout the spectrum of all of those activities. And I do think helpful for us in our roles, a helpful outcome of the COVID experience has been the appreciation of more people around the importance of good content for organizations. And that could be internal communications. It could be what you're putting out in the world externally, but the importance of good content / the realization that good content is hard to produce. So, if you look at sort of where you're trying to innovate or save costs or use technology to create learnings, if you're talking about sort of your impression delivery mechanisms, I think technology and various, marketing automation, it just keeps getting better and better, and you need fewer people to actually organize those efforts. The reverse is true of the content side, right? It's still, you can have all the AI algorithms that want to reproduce sort of fast content, but if you're really trying to differentiate yourself through good content, it takes people, and it takes hours and hours and hours of work by those people to produce good things. So I think that's probably the relative impact of where you look at where you need to increase the budget then comes back to people, and often that's in communications.
The Opinium team noted that 20% of comms leaders are predicting their budgets will decrease in the next year. If comms leaders have to prioritize, what do you think are the key areas they should focus their budget on, or areas they can do without? What do you think?
That's obviously going to vary by company and potentially by business line, but I can certainly share my approach. Before committing scarce resources to an initiative, I always evaluate 3 things. Will our investment meaningfully contribute to achieving a high priority business goal? Will we produce value that communications can uniquely contribute? And is the value of comms impact enough that the business will invest alongside me if needed? For example, during the pandemic, a lot of resources understandably shifted from external to employee-oriented communications, but we still needed to engage our customers. And in their new, more challenging circumstances, without many of our usual tools like client visits and events. So we shifted a lot of our external communications resources to focus on answering customers' questions and reassuring them about our reliability and support. And for us, as our customers can access the Bloomberg terminal from anywhere, even throughout the pandemic, we use that as a primary channel, which required us to build new functions on the terminal. And the business contributed development resources so we could do that quickly. That checked all the boxes.
Interesting. Elliott, what would you add?
Yeah, I guess I would go back to the content piece. I think it's just having people who can produce good content and people who can produce good content quickly is a really just fundamental part of a comms team these days, and they're hard to find. And when you do, you generally have to, you want to keep those people on board. So prioritizing people on the team, silly to say that hasn't been important before, but I think it's become even more important if you look at where your resources are going to be spent.
Thank you. Before we move on to our final theme, does anyone have any final thoughts they want to share?
Well, I don't think there's a one-size-fits-all answer for that, but I think the strategic imperative there is to find out from the business what's going to help them be the most successful, or where are the areas they're trying to be most successful, and then double down on that. Right. So if you can go to your business partners and say, what are your top 5 priorities for the year from a revenue standpoint, and then focus on those, and if you can't focus on 5, focus on the top 2. That's where your focus should be, or whatever the organizational focus should be. Because in some organizations like ours, a priority for the business and for leadership is to be seen as an employer of choice. And so that's not a revenue generating thing, but it's a people generating thing. But if you can tie whatever your activities are and show direct linkage to those prioritizations, then that's what you should be doing. I mean, that's what you should be doing anyway. And then what you really should be doing is, well, if I only have enough money to do the top 2, then do that. But if I can, I should do all 5. But that's it, right? It's either, put your prioritization where the business is and where the success is. I tell, my marketing colleagues all the time that our communications agenda is the success of the business. Like, we don't have a separate agenda than that.
Thank you all for sharing. Alexa, Giulia, back over to you.
Thank you so much for all those comments. We are going to be moving into our final theme of the presentation, where we're really seeing Marcom's leaders share that this impending recession is starting to affect their executional plans. So our data from August did reveal that just over half of our respondents were concerned about the possibility of impending recession. So 2 in 5, that 40%, said it was somewhat of a concern, and an additional 11% were significantly worried and had already started preparing for the possible impending recession, and only 7% there on the left had not given a potential recession any thought at all. So, presumably if we were to take this data today, this might look a little bit different, perhaps showing even further concern, as our panelists will comment on in a second. But we do see as well that the impending recession is already forcing Marcom's leaders to shift their plans for next year. So nearly 3 in 5 financial Marcom's leaders said the impending recession had already impacted their plans for 2023, or that they expected it to. And a quarter of Marcom's leaders said the impending recession had only had a slight impact on their plans for next year. And then we see 13% reporting a moderate or major impact there on the left. So how are they actually changing their executional plans? So even though they can see that changes are coming in 2023, they've already started to change their strategies, and accustomed to a rapidly changing environment, especially coming out of the COVID years, making changes on the fly. Many of these financial Marcom's leaders are making really immediate strategic changes in preparation for this impending recession. The most common, as you can see here, immediate tactical change they're making is to shift their messaging. So 2 in 5 are doing so, and a third are already designing campaigns for an economic downturn. About a quarter say they're taking a closer look at their 2022 financials, with 26% reporting they're reviewing or reconfirming 2022 budgets. And we see 25% adjusting their media spend as well. So we definitely see the impact it's having on kind of financial calculus in these teams. 1 in 5 have already had to actually decrease their Marcoms budgets for the remainder of 2022 due to this impending recession. And what's interesting we see here in the callouts is that marketing functions have been more affected, or perhaps maybe just swifter to respond to the impending recession than communications teams, according to our data. So we see a third of comms leaders said the possible recession has had no impact on their current plans, compared to only 8% of marketing leaders. And in the same vein, 29% of marketing leaders reported they had already cut back on extra projects in response to the looming recession, compared to only 13% of comms leaders. And in terms of, taking a closer look here at how the messaging is shifting, we see that Marcoms leaders are shifting messaging to focus on the importance of long-term perspective, especially when it comes to investing. So some of these quotes you see here on the left, one CMO in our survey saying that, a reminder of long-term perspective and value added is a key priority in their messaging. A lot of them, emphasizing staying the course and the importance of investing for the long term. But as you see on the right, they're also dialing up a calm and reassuring tone, really focusing on safety and stability. But I think it's important to note that Marcoms leaders are having to strike a careful balance here, as overly hopeful language in this type of precarious environment can perhaps strike the wrong chord and appear out of touch. So to this end, we're seeing many Marcoms leaders also emphasizing the importance of acknowledging that it's a difficult environment. And I'm really curious to hear what some of our panelists have to say and how they maybe are resonating with some of this. So back over to you, Binna, to connect with our panelists.
Thank you for sharing, Giulia. Do you have any recommendations or advice for your peers on how to prepare for a potential recession?
Yeah, absolutely. So it a recession and a whole bunch of other things at the same time, right? We've got a recession with rising rates, arguably a recession caused by rising rates. We've got the geopolitical instability and the ongoing pandemic situation that we talked about. All of those are contributing to really strong swings in foreign exchange markets. So it's more than just recession, right? How do you handle recession plus inflation? How do you handle recession plus forex volatility? It's again always an opportunity to talk about the important role that we play in people's financial lives, no matter what part of this industry you work in. Your company has something to do with how people are investing their money, deploying their money, saving their money, and hopefully some part of your value proposition is going to speak to an opportunity here, whichever corner of the market you're operating. Looking at it in sort of isolation on smaller pieces, inflation is a big one, and we have to handle cost pressures. We have to figure out the impact that that's having on our employees and our customers, and we need to make sure we're deploying solutions and messaging that understand that, recognize that, and hopefully address that and provide some relief to that. But more broadly, a very wise financial advisor once said, if you can't sleep at night because you're worried what your portfolio is doing, it means your asset allocation is wrong. So maybe you need to adjust your asset allocation. Maybe you need to ride it out because you're already good with your asset allocation. But again, it's an opportunity to take a strong look at how you're using your money, what your money's doing for you, so that you can feel better about weathering the storm and waiting for the recovery.
Thank you, David. Anyone else?
I think the most important preparation is really understanding how a potential recessionary environment might affect your customer, right? You can think about sort of how your own company is affected, your budget, probably the most notable thing, how, talent might be harder to come by. And you can pull those levers, as part of a management team to control you expect. But the harder outcome is always going to be, are your customers still showing up because of whatever it is they're being impacted by? And so that's probably what should dictate your response as much as anything else is what's the experience for them like, and then how does that affect what you're planning on doing.
Can you talk a little bit about how your team has shifted projects and strategic plans based on a potential recession?
We haven't. Yeah, we haven't. I mean, we just, like I said, like we have that, and we have our North Star is true. We know exactly where we fit in the funnel. We know what exactly the business priorities are, and we go for and we go forward the way. Now we might have to shift because the business priorities shift for sure. So I don't mean it that way, but from like a team perspective, like how we execute, we shouldn't have to. I think the prioritization will shift, but not how we execute as a team.
Anyone else?
I'll say I'm in the fortunate position that we haven't been too affected yet. At my company, certainly, we're looking again at what our customer experience might be, and then as a result, shifting some, budgeting expectations across the entirety of the company for next year. But at this point, knock on wood, we're still feeling pretty good about going into next year and still being able to achieve the things we want to.
Do you expect the data around Marcom's leaders' concerns about recession would be different if the survey was taken today? Would Marcom's leaders be more concerned about recession now?
Yeah, I think this is a question maybe we need to be asking daily at this point, given news from the markets, given news from the Feds, given news from Ukraine, whatever it might be. Things are moving incredibly quickly. I also think what. As I answered this one when I took the survey, is it a concern? Yes, it's a concern, but in the sense that we just need to make sure that we are deploying our strategy in a way that takes advantage of the opportunity. Again, we work in finance, all of us, and this is a financial situation, which is a huge opportunity for us to prove ourselves, no matter what part of it you work in. This is the opportunity for you to show your value. If they were talking about something else and not talking about finance, then we're sort of in the background. But we're at the front of the stage right now, and it is. I really think it should be seen as an opportunity to step up and do our best. Again, no matter what part of the financial world you operate in.
Thanks for sharing, David. Does anyone else have anything else they'd like to add?
I have to agree with Dave here. Honestly, it troubles me that so many of us in this industry, in finance, with all of the financial news and information at our disposal, were apparently ignoring the flashing signs of economic downturn just a couple months ago. And if we're concerned about our place at the executive table, especially as executive and board focus is returning to growth in this challenging economy, if we can't be seen as trusted advisors who are anticipating and preparing for macro trends like this that have huge impacts on our businesses and our industry, we actually deserve to lose whatever seats at that table that we've managed to earn.
Thank you all for sharing. As we wrap up our time together today, I'd like to ask each of our panelists, what are your key takeaways from this report?
Yeah, I think the bottom line is that as practitioners, we have to be tightly aligned to the business and show that we're a value add and a resource to them during good and bad times. And I think if that's what the research is showing to me, is that if as Marcom practitioners, we can continue to stay aligned to business priorities and firm priorities and cultural priorities, then our value will remain significant for the firm. And then our value won't be questioned and our ability to function will continue. But I think if you detach I think whether it's recessionary times or not, if you're detached from the strategic, thinking of the firm and you're just executing, then that's when you get into a peril, because then you feel more like a commodity than an investment.
Interesting. Alyssa, what would you add?
What struck me as I was looking through the findings is that, our participation from our community in this study is continuing to get stronger. And I think that's a really positive thing for our community. We're starting to see some recent history of these trends in our profession that are unique to our industry. And I don't think we can get this type of intelligence anywhere else right now. So broadly, I just think it's fantastic that we're continuing to do this study, getting good participation in it, and being able to benchmark ourselves against ourselves.
Thanks. David, what do you think?
I think this is just such valuable information and data specifically. And so a big thank you to everyone who participated in filling out the survey. A big thank you to Financial Narrative for pulling it together. I think this is, as others have said, just the real finger on the pulse, first party information and feedback that's so valuable to have as we are all looking at how to navigate these waters. It's good to have the network. It's good to be part of the network, and it's very, very valuable and useful to have the candid and really powerful targeted data here to learn from and operate from. So thank you, everybody.
Thank you. And finally, as we move towards 2023, what are the key areas that you're watching as you put your plans together?
So personally, I'm going back to the content theme and really just thinking about, how do we take sort of what I would call traditionally external methods of communicating and kind of reaching customers through, that could be through social media channels, that could be just through sort of a marketing mindset around, how you might communicate your products and reach customers, and applying that internally as much as anything. Because, from where I sit, we've got like I said, a very high growth organization that's pretty dispersed around the world. And we often have a hard time connecting internally just because of the structure of the company. So, as I look to continue building our team, what I'm looking for is really people who can apply kind of a marketing and branding mindset to both the customer operations and sales marketing that we put out in the world, as much as they can apply it to the internal communications that are kind of keeping everyone in lockstep.
Thanks, Elliott. Anyone else?
One of the things that's really interesting for us is that news cycle can influence our go-to-market strategy based on what our clients' needs are. So we continue to really strongly track the news cycle and how we're reaching out and connecting with clients, because their needs are being, reflected in what we're seeing and reading. So what I mean by that is severe weather or energy shortages or inflation. So all of those things that we're reading and seeing and hearing about on a regular basis actually impact our clients in one way or another. So I think we're going to stay much more attuned and aligned to the news cycle, not just from a news perspective, but how that impacts our business.
Thank you. Anyone else?
Part of leading a communications team is looking around the corners. And right now, it is like being in a house of mirrors. So it's hard to know where not to look or where it's safe not to look. I would say ESG is not going away, and it's something that becomes more interesting by the day as different governments take different positions, different investors take different positions. It's going to continue to be a rapidly evolving and I think increasingly more complex issue for us. I'm keeping a very sharp eye on crypto assets and distributed ledger technologies, understanding the impact of those in our space and the role that we will be expected to play in helping institutional investors understand the opportunity and challenges there. So those are two areas.
Thank you, Alyssa. Anyone else?
Yeah, definitely still handling not just the volatility in markets, but and how that trickles down into things like ad spend mix, deployment of resources for our sort of current plan, but also innovation. Others have mentioned DLT. Obviously, I'm in the digital space. The velocity of change there is incredibly high. I think we're going to see some really interesting things in terms of new technologies continue to develop in the areas of augmented reality, virtual reality, extended reality, and things that we've learned during COVID. How we work differently, how we interact with our markets, our customers differently. I think a lot of those are now set as expectations, and what it means for client experience, what it means for user experience will continue to be a focus, and we're going to continue to accelerate on that.
Thank you to all of our panelists for sharing your time and insights with us today, and to Opinium for partnering with us on yet another year of this amazing research. We're creating 5 mini reports for you to download based on this research. Check our website regularly to see other upcoming events, like our next speed networking event coming up on November 16th. And if you're not a member yet, we'd love to have you. You can apply on our website, www.financialnarrative.org, on the Explore Membership tab. Thank you, everyone. Have a great rest of your day.